What would you say to the possibility of making additional money on your Bitcoin holdings? You use it as a collateral and get a loan against it in the form of cryptocurrency or stablecoin, similar to going to a bank for a loan. Wait, there is got to be a catch. DeFi, decentralized finance, are blockchain-based projects that allow users to use financial services without the need for traditional financial institutions such as banks. These projects are decentralized, meaning they are not controlled by individual entities, but rather by an entire network of users. I talk about blockchain in a recent video on Bitcoin. What are the earning opportunities in DeFi? There are different ways to earn DeFi projects. For example, you can use so-called liquidity mining, where you put your cryptocurrencies into a certain DeFi protocol and earn rewards in the form of new tokens. You can then sell these new tokens for other cryptocurrencies or currency. Staking. Some DeFi projects offer staking as a way to earn passive income. This means that you can put your cryptocurrency into a certain protocol and get rewarded with tokens of that cryptocurrency. These tokens can then be sold or used for further investment. Another earning option is yield farming. Yield farming refers to the profit from providing liquidity when used on more than one DeFi protocol. Yield farming typically involves staking tokens, supporting the blockchain network, in a protocol and using the tokens earned to further provide liquidity in other protocols. Exchange trading. Trading cryptocurrencies on decentralized exchanges. DEX is another way you can make money on DeFi projects. DEX exchanges are open and require no registration, allowing easy access to trade different cryptocurrencies. As you can see, there are several ways. How did DeFi projects come about? DeFi began to emerge around 2017 with the advent of blockchain networks like Ethereum, which allowed the development of decentralized applications and smart contracts. In 2018, the first DeFi began to appear, such as MakerDAO, which allowed users to obtain loans in cryptocurrencies based on collateral. In the following years, DeFi projects have grown rapidly, both in number and variety. Other projects such as Uniswap, Aave, Compound and Curve were created, offering users various financial tools such as exchanges, loans and yield farming. In 2020, there has been a huge increase in interest in DeFi projects, and their market capitalization has increased significantly. In August 2020, the total value of the DeFi market peaked, reaching a value of over $13 billion. Let's take an example of the top 5 DeFi projects. I selected the list of the largest DeFi projects based on the capitalization from coinmarketcap.com, which ranges from $3 to $5.5 billion. In the context of Bitcoin's capitalization of $529 billion, or the second largest altcoin Ethereum's $219 billion, the Fizz projects are little brothers. Uniswap, ticker UNI. It is a decentralized exchange for trading cryptocurrencies and tokens that acts as a platform for creating liquidity. Users can deposit their cryptocurrencies into so-called pools, where these cryptocurrencies are exchanged with other cryptocurrencies based on the current exchange rate. Uni tokens are used as a method of payment for services within the Uniswap network, such as trading fees or liquidity creation. Users who deposit their cryptocurrencies into pools receive Uni tokens as a reward for providing liquidity. They can then use these tokens to vote on decisions within the Uniswap protocol. Chainlink, ticker Link, is a decentralized network or record protocol that allows blockchain applications to connect to external data and information sources. Link tokens are used as a payment method for services within the Chainlink network. This allows users to obtain and provide various information such as price of different assets and use it within DeFi applications. Wrapped Bitcoin, ticker WBTC, is a token that is based on Ethereum technology and is secured one-to-one against Bitcoin. This means that for every WBTC there is a corresponding amount of Bitcoin. WBTC allows users to use Bitcoin within a DeFi ecosystem and trade it on various DeFi platforms. DAI, with ticker DAI, is a stablecoin that is pegged to the value of the US dollar. This means that the value of DAI should remain stable and not be subject to large fluctuations as is common with other cryptocurrencies. Users can create DAI by posting collateral in the form of other cryptocurrencies such as Ethereum. DAI is used as a payment method within the DeFi ecosystem. The largest DeFi project by capitalization is Avalanche, ticker AVAX. It is a decentralized financial protocol that allows users to create and trade various assets, including cryptocurrencies and tokens. AVAX is also the currency of the Avalanche network, allowing users to pay for transaction fees and other services within the network. Avalanche focuses on speed and scalability, which means it can quickly adapt and handle the processing of more transactions as users grow. In what ways could DeFi projects replace current financial services? DeFi projects can help reduce the cost of and improve access to financial services while increasing transparency and autonomy for users. Lending and credit. DeFi projects allow people to borrow and lend money without the involvement of traditional financial institutions. Unlike bank loans, which come with high fees and long approval processes, DeFi loans can be fast, simple and cheap. Investing and trading. DeFi projects allow people to invest in cryptocurrencies and other digital assets without the involvement of traditional brokers and investment banks. This reduces transaction and investment costs and increases transparency and investor autonomy. Currency exchange. DeFi projects allow people to exchange cryptocurrencies and other digital assets without the need for a central exchange. This allows for reduced costs and increases the speed and convenience of exchanging currencies. Insurance. DeFi projects allow people to take out insurance policies without the involvement of traditional insurance companies. This allows for reduced insurance costs and increases the availability of insurance for people in developing countries. What are the risks of DeFi projects? I'm not going to kid you here, the risks are big. For example, smart contract risk. Smart contracts are programs programmed on the blockchain that manage financial transactions in DeFi projects. However, these contracts are prone to bugs and vulnerabilities which can lead to loss of funds for users. Market risk. DeFi projects are often dependent on market liquidity, which can be disrupted due to significant fluctuations in cryptocurrency prices or unexpected market events. This can lead to losses for users who hold digital assets in DeFi projects. Security risk. DeFi projects are vulnerable to attacks by hackers who can gain access to digital assets or smart contracts and steal them. This can lead to loss of funds for users. Regulatory risk. DeFi projects are often unregulated, which means that users are not protected in the same way as in traditional financial services. If a regulator were to intervene, this could have a negative impact on the operation of a DeFi project. What do I think about DeFi? They work perfectly in a growing economy. I remember the headlines when people invested millions of dollars in DeFi, only to lose it not long after due to the market crash during COVID or the current 2023 recession and bearish markets. Crashes of around 80 to 90% of the original price are scary. Personally, I will only watch DeFi projects from afar. They were an interesting alternative to the financial services of the big banks. In any case, it is a very small market compared to cryptocurrencies. If Bitcoin has a capitalization of $529 billion and the largest DeFi project has only $5.5 billion, you can probably see that this is something like an IPO of a stock, where it is unknown how the company will perform and what will be left of it in the end. To me, DeFi projects, the cryptocurrency world, and all assets depending solely on price appreciation are a risk. I'm never able to estimate the ideal price, and I want to make sure that even if I invest wrongly, I'll get my money back over time. I consider myself a long-term investor and do not look for short-term ups and downs 100%. In any case, it's good to be in the know and know something about DeFi. If you've watched to the end, I'll be happy if you give the video a like and subscribe to the channel. Have a great time and think carefully before you buy DeFi project.